Committee will come to order without objection. The chair is authorized to declare a recess of the subcommittee at any time. Without objection, members of the full committee not on this subcommittee are authorized to participate in today's hearing. Members are reminded to keep their video function on at all times, even when they are not recognized by the chair. Members are also reminded that they are responsible for muting and unmuting themselves and to mute themselves after they are finished speaking. Consistent with the regulations accompanying House Res 965, staff will only mute members and witnesses as appropriate when not recognized to avoid inadvertent background noise. Members are reminded that all House rules relating to order and decorum apply to this remote hearing. This hearing is entitled Insuring Against a Pandemic, Challenges and Solutions for Policyholders and Insurers. And I now recognize myself for 3 minutes to give an opening statement. According to the Congressional Research Service, 110 million people worldwide could enter a state of extreme poverty due to the global economic contraction. And here in the United States, 67 million people have filed for unemployment insurance since March of this year. The harmful effects of this pandemic on the stability of small businesses like restaurants cannot be overstated. There have been literally dozens of restaurants in my home district in St. Louis that have closed, many permanently as a result of this pandemic. And with them, the vendors who sell them goods, the farmers who grow the food, the truck drivers, storage facilities, and entire supply chains are all affected. Though many businesses have insurance, most of the policies have exclusions for pandemics, which are likely to be upheld in the courts. I would add that for many small businesses around this country, the probability of even suing to enforce a policy is unlikely given the high cost of litigation. On the other hand, it is not realistic or practical to expect the insurance industry to shoulder the astronomical cost of a global pandemic. The American Property and Casualty Insurance Association has estimated that paying all claims, regardless of exclusions, would amount to $1 trillion per month. While I applaud the introduction of legislation by my colleagues, like Congressman Thompson and Congresswoman Maloney, and the input from industry, my bottom line is that any solution will need effective buy-in from industry and deal with the conundrum posed by the fact that many of the business interruption insurance cases being adjudicated have been dismissed not only because of any virus exclusion, but also because of a lack of direct physical loss or damage. And for businesses, there is an expectation that you would have some skin in the game, particularly if you are going to petition or even accept government assistance. Indeed, perhaps industry could work with business owners and consumer groups to devise a type of umbrella policy for which the business pays a suitable premium and is insured for everything, because the current system is rife with confusion and complexity. Because it is my firm belief that a small business owner should not need a battalion of lawyers to handle their insurance claim after faithfully paying their premium. And I look forward to the testimony of our witnesses as we roll up our sleeves and try to find a viable solution. And at this time, the chair now recognizes the ranking member for 4 minutes for an opening statement. Mr. Stivers, I recognize you.
Thank you, Chairman Clay. I want to thank you for convening this hearing. First, I'd like to take a moment to thank our colleague from New York, Congresswoman Maloney, for her efforts to put forward an idea as early as May of this year. Her work should be applauded as a symbolic first step. But I'd like to take a step backward and put this hearing in perspective. The problems and solutions that we're going to discuss today are about creating a plan for the next pandemic. For that reason, it's so much more important that we get this right than that we do it fast. Congresswoman Maloney has reached out to me and asked for bipartisan collaboration. I feel very strongly, as you do too, Mr. Chairman, that any product that we put forward must have meaningful support from both parties. And ultimately, if we're going to have any impact on Senate deliberations, we need a really big vote. So we need a bipartisan agreement. And as the ranking member of this subcommittee, I can tell you Republicans are committed to working in a bipartisan way. But we need to make sure that as we do that, I think, again, we take a step back and don't start with a preconceived outcome. When we take a step back, maybe we'll end up using an insurance industry model, or maybe we'll end up with a non-insurance approach like a pandemic PPP grant. I'm sorry, a parametric PPP grant. But whatever we do, we must first make sure that it solves the problems of businesses that are shut down during the next pandemic. Some of my colleagues today may focus on the existing framework in place for the terrorism risk insurance, but I want to be really clear. The scale and scope of a pandemic is orders of magnitude bigger than a terrorist attack. You illustrated that too, Mr. Chairman. I think we should spend our time today trying to understand the nature of the problem and the issues with around those for people that will be testifying today. People that are experiencing the problem day to day. Furthermore, as we've seen, the pandemic has proved disastrous for one-time large events as well. Any solution that we address must look at event cancellation as well. That's something that's not in this proposed legislation at all. I'd like now to yield some time to the ranking member, Mr. McHenry, but before I do, while I'm not advocating for any one proposal, I would ask unanimous consent to enter the Business Community Coalition statement into the record. They did not have a witness that was allowed for this hearing. So, Mr. Chairman, I'd like to ask unanimous consent to enter their statement into the record.
Without objection, the statement is accepted. Now, Mr. Stivers, I am going to recognize the chairwoman of the committee, and then I will recognize Mr. McHenry.
I just want to give him some of my time, but thank you for holding this hearing, Mr. Chairman. I think this is a critical first step. I look forward to working together to get things done. I yield back.
The gentleman yields back, and now I recognize the chairwoman of the full committee, the gentlewoman from California, for 1 minute.
Thank you very much, Chairman Clay. When the COVID-19 pandemic hit in March, small businesses were devastated and have been largely unable to rely on their business interruption insurance policies to cover these losses. As we economic forecasters are warning that small businesses, many of which have not recovered from the disruption they have experienced already this year, may permanently close if policymakers don't act. Congress has an important role to play, but with the election of President-elect Biden, I'm hopeful the government will respond to this pandemic with effective leadership, which has been and continues to be absent under the current president. So I'm looking forward to today's discussion of the various paths forward, and I thank the witnesses that we will have here today. I'll yield back. Thank you very much, Mr. Chair.
I thank the chairwoman, and I now recognize the ranking member of the full committee, the gentleman from North Carolina, for 2 minutes, Mr. McHenry.
Well, thank you, Chairman Clay. Chairman Clay, thank you for your leadership. You've been a strong advocate for your deeply held convictions during your time in Congress. And I want to commend you for also your bipartisan work in Congress. And it's been an honor to serve with you here on the Financial Services Committee.
Thank you.
Thank you. And and I appreciate the committee holding this hearing. I know it's been delayed because of the nature of this election year and what's happened across the last couple of months. It's an important issue to tens of millions of Americans and small business folks. I appreciate the work of the gentlelady from New York, Ms. Maloney. What she has done on this issue is put a marker down to show that Congress should get to work on a pandemic response for future pandemics. And while I have concerns about the construct of her legislation, PRIA, and I think there are a number of unsolved problems in it, it's a nice first step to start this conversation. And there are some unworkable parts of what she's laid out. There are some unresolved parts, but I think we can work through and come to a bipartisan agreement that would have lasting impacts on small businesses and folks across the country. Instead, I think our businesses do deserve a bipartisan consensus-based solution that builds on the existing successful ideas that we've put in place over this last year. I think we need to look at solutions that incentivize participation. We need to look at solutions that are scalable, solutions that use our state-by-state, harness the power of our state-by-state regulatory environment, and look at existing programs like PPP that have saved millions of small businesses. So thank you, Mr. Chairman. Thanks for your leadership, and I look forward to the testimony today.
Thank you so much, Mr. McHenry. And now I want to recognize the chairwoman of the Committee on Oversight and Reform, the gentlelady from New York, Ms. Maloney, for 2 minutes.
Thank you, Chairman, Chairwoman Waters, and Subcommittee Chair Clay for holding this important hearing. After the terrorist attacks on 9/11, the economy in New York completely shut down. We couldn't build anything because insurance companies would not insure any property against terrorist attacks. So we came together in a bipartisan way and passed TRIA. TRIA successfully unlocked the market, got the economy moving again, and put people back to work. And that's what we're trying to do with the Pandemic Risk Insurance Act. Tens of thousands of small businesses have closed their doors permanently. Entire industries, from travel, film, television, have been upended, and they have no way to protect themselves from future pandemic-related losses. Currently, business interruption insurance policies explicitly exclude pandemics. We can't continue to expose our economy and small businesses to this level of risk and expect them to recover. We know the federal government will step in during the next crisis, so why not be proactive and develop a long-term solution? PRIA is a starting point for a forward-looking public-private risk-sharing partnership that would provide a federal backstop for business interruption policies that include coverage for pandemics. PRIA would create a totally voluntary program. Insurers could provide policies if they wanted to, and policyholders could purchase them if they wanted to. It is totally voluntary. A broad consensus has emerged that pandemic risk is insurable with an appropriate federal backstop, and this is supported by more than 50 stakeholder organizations. At this point, we're simply debating the best way to structure such a program, and I am willing to collaborate with any of my colleagues, Democratic, Republican, and stakeholders to improve this bill and do just that. We must be proactive. Mr. Chairman, may I place in the record the list of the 50 organizations and insurance companies that are now supporting it?
Without objection, and the gentlewoman's time has expired. Thank you. Today, we welcome the testimony of our distinguished witnesses. Ann Cantrell, owner of Annie's Blue Ribbon General Store, on behalf of the National Retail Federation. We also have John Doyle, President and CEO of Marsh and McLennan. Brian Kuhlmann, Chief Corporate Counsel, Shelter Insurance on behalf of APCIA and NAMIC. Michelle Melendez McLaughlin, Chief Underwriting Officer of Chubb North America. R.J. Lehmann, Executive Editor and Senior Fellow, International Center for Law and Economics. Witnesses are reminded that your oral testimony will be limited to 5 minutes. You should be able to see a timer on your screen that will indicate how much time you have left, and a chime will go off at the end of your time. I would ask you to be mindful of the timer and quickly wrap up your testimony if you hear the chime, so we can be respectful of both the witnesses and the committee members' time. Without objection, your written statement will be made part of the record. And Ms. Cantrell, you are now recognized for 5 minutes to give an oral presentation of your testimony. You may proceed.
Yes, good morning, Chairman Clay and Ranking Member Stivers. It is an honor to appear before you today to discuss pandemic risk insurance from a policyholder's perspective. I would like to give a special shout out for women and thanks to my Congresswoman, Lydia Velazquez, who has been a champion for women-owned businesses. We have been women-owned and operated since the get-go, and I am so proud that she chairs the House Small Business Committee. The fact that this hearing is being held shows that members of Congress really do care about people on Main Street. The National Retail Federation has partnered with Congresswoman Carolyn Maloney, the sponsor of the Pandemic Risk Insurance Act, and we would like to thank her for her leadership on this issue. We look forward to bringing much needed protection and relief to retailers across the country who have been suffering during this crisis. Retail sales and jobs have been devastated by the pandemic. This is not only a health crisis, but a dire economic crisis. It is an honor to appear today on behalf of the NRF. I am joining you from Brooklyn, New York, where I've had the pleasure and honor of owning a thriving gift shop for the past 13 years. We are a community store, and people look to us as a pillar of light and hope in the neighborhood. Kids meet their friends at the shop to pick out a gift for their teacher. Parents bribe their kids with a treat from our store if they have to get a shot at the doctor, or reward them if they get a good report card. Neighbors come in daily to see what's new. However, all this changed in March when the whole world started to cave in around us because of COVID-19. When my team and I discussed closing on Friday, March 13th, yes, Friday the 13th, I immediately called my insurance company. My broker has been with me since the beginning and has never steered me wrong. We have an honest relationship, and he knows my business well. I love that he and his wife even follow my shop on Instagram. He taught me my favorite term in business, a measured risk, and that's exactly what he called my move to a new location 7 years ago, when we doubled our square footage and quadrupled our business. He has always been extremely helpful and straightforward. I remember proudly showing him our new place as he explained in detail our comprehensive insurance policy that would cover 12 months of business income if something should happen to my business and I needed to shut down. I have all risk special form insurance from the Hartford Sentinel Insurance Company, which costs $6,182.53 annually. This doesn't include workers' comp or ERISA bond insurance, which I also carry. This is a big expense for a small business, one I had thought would help me in crisis situations. However, harsh reality soon set in. I quickly learned that viruses and pandemics were excluded from insurance policies like mine. Years ago, even though we were ordered to close our business by the governor, there would be no relief from our insurance company because it is not considered a business interruption because it is not property damage. Insurance companies should not be in the practice of denying policyholders coverage when they need it the most. What happened to you're in good hands, or like a good neighbor, and so is there. And so is there. As I read back through my email conversations with my broker, my heart just sinks at the desperation in my tone as I slowly realized what was happening. Even as I followed up, seeing posts on social media saying restaurants would be covered and reached out for help and guidance, there was no relief in sight. I made similar calls to my landlord as I tried desperately to figure out how I would keep covering our financial obligations and pay my team members. I kept trying to figure out our next moves. The next few months have been the darkest in my life. Navigating the uncertainty of a business I dedicated years of my life has been so sad and stressful, compounded by the frustrating, traumatic experience of applying for and hoping to get a PPP loan. Fortunately, we did receive a $58,000 PPP loan, and I would like to thank members of Congress who supported the CARES Act, which really helped us keep afloat. All in all, we were closed for over 3 months, missing some really big holiday selling for us through Easter and Mother's Day. In the same time frame for 2019, we made $300,000. This year, we made a little more than half at $166,000. I understand the Pandemic Risk Insurance Act as a solution that would only cover future pandemics, but it still needs to be passed as soon as possible because we never know when the next pandemic will come. We certainly didn't see this one coming. And in the meantime, I urge members of Congress to provide some sort of relief to businesses that were forced to close by government mandate during COVID-19, even if it's not in the form of business interruption insurance as such. I would also like to note that the National Retail Federation is a member of the Business Continuity Coalition. The BCC seeks not only widespread availability and affordability of non-damage business interruption insurance coverage, but also restoration and expansion of pandemic coverage in other lines. This includes event cancellation, movie, TV, production insurance, employment practices, liability, and other lines that have been hard hit by COVID-19. The Pandemic Risk Insurance Act would establish a federal program that would help businesses obtain insurance coverage for pandemics, modeled on the program for terrorism insurance established following 9/11. When businesses cannot obtain coverage for acts of terrorism after 9/11, Congress stepped in. It is time for Washington to do the same for pandemics. The country needs the Pandemic Risk Insurance Act. Not every pandemic will have a worldwide impact, but when one occurs, it is likely, again, result in nearly total cessation of business. This legislation is the cornerstone of a proactive approach in managing the risk and impact of a pandemic in the future. It is time for a real solution to solve a real problem. I would like to thank the committee for inviting me here, and I'm ready for any questions you may have.
Thank you so much, Ms. Cantrell. Mr. Doyle, you are now recognized for 5 minutes to give an oral presentation of your testimony. You may proceed.
Thank you, and good morning, members of the committee. My name is John Doyle, and I am the president and CEO of Marsh, the world's largest insurance broker and a business of the Marsh and McLennan companies. I appreciate the opportunity to speak with you about the need for a public-private partnership to ensure pandemic risk. While the COVID-19 pandemic is first and foremost a human tragedy, we are deeply concerned about its impact on the economy and on our clients. Our primary role as an insurance broker and risk advisor is to be an advocate for our clients, which is why I'm here with you all today. At Marsh, we believe that a public-private partnership is the best option to pursue for a pandemic risk solution. For that reason, I want to recognize the leading role that Congresswoman Maloney has had in the debate, including introducing the legislation that has brought us here today. Although some have suggested Congress should delay until the current pandemic is over, we feel there are compelling reasons to act now. First, acting now on a public-private pandemic risk solution will accelerate the economic recovery by reducing uncertainty. Moving forward, capital markets will seek assurance that companies have protection against prospective pandemic risk. The pace of recovery will depend upon the nature and degree of confidence in the marketplace. Second, taking action now will provide financial protection against future pandemics, in part by absorbing some of a pandemic's initial financial shock. Third, if we start now, with time and the right solution, we can bend the risk curve for future pandemics. Insurance creates the right economic incentives to drive change in society. Moving quickly will help us to harness risk management and to build a more resilient U.S. economy. By definition, pandemics are global, meaning that clients and insurers cannot diversify against them as they can with other catastrophes. And the stakes around pandemic risk for policyholders, and these include businesses and organizations of all sizes and from all sectors, are too high to defer action. As we have thought about developing a workable solution, the following principles have guided us. First, we look at risk mitigation and resilience. How should the solution be designed so that it embeds measure to encourage resilience in the community? For example, should it incentivize preventative measures on the part of insureds? Should it invest pool reserves in resilience initiatives, or be linked to ongoing government commitments to build resilience in the system? Next is the funding model. A public-private partnership could facilitate increased private market participation over time with an appropriate level of industry commitment. Third, a third principle involves the scope of coverage. Should the coverage be compulsory for insurers to offer? And should it also be compulsory at some level to purchase? Next is distribution and an operating model. A solution must contemplate the infrastructure required to operate the scheme on a going forward basis and the technology that's needed to meet its objectives. Finally, the claim process. A solution must include a well-defined trigger that identifies relevant thresholds and specifies how and when claims are to be paid. The credit and power of the U.S. government is essential to creating a program that harnesses the financial and social benefits of insurance to mitigate pandemic-related economic losses, while also providing greater certainty about a sustained recovery. At the same time, I believe the insurance industry has a role to play. To which you may be asking, are pandemics insurable? The answer is complex. The last several months have demonstrated that traditional insurance solutions and the commercial insurance market do not fully provide businesses and others with the protection they need against the enormous costs of a pandemic. Pandemic insurance has existed for a long time, but has rarely been purchased. Its cost and the low likelihood of an event makes policyholders reluctant to insure against it. At the same time, various insurance policies explicitly exclude pandemic risk. The main reason for that is the payouts, while sporadic, can be so enormous that they exceed the insurer's capacity to bear them. Despite that many companies are now looking to existing policies for help with the ongoing financial loss from COVID-19. Even without specific pandemic insurance in place, insurers will undoubtedly pay out tens of billions of dollars in COVID-19 related losses. Nevertheless, some policyholders will be disappointed. The complex nature of pandemic risk means that we need strong national pandemic risk management. This requires insurers backed by the federal government to write pandemic insurance policies and for brokers to contribute our risk knowledge and infrastructure. Widespread pandemic coverage would make the insurance sector the first line of economic response in future outbreaks. A public-private partnership will help facilitate coverage, align the needs of insurance buyers and insurers to avoid losses, and incentivize pandemic risk preparedness and mitigation. Over time, a risk program can spur new technologies, insurance products, and processes to mitigate the enormous losses associated with pandemics. Public-private partnerships have proven to build resilience into the economy. While pandemic risk is very different than terrorism or crop-related, if we create economic incentives for insurers, insurance can serve the traditional function of mitigating risk. Thank you, and I look forward to your questions.
Thank you, Mr. Doyle. And at this time, we will go to Ms. McLaughlin. You are now recognized for 5 minutes to give an oral presentation of your testimony. Please proceed. Please unmute. Oh, you're on.
Sorry. Good morning, Chairman Clay, Ranking Member Stivers, and subcommittee members. My name is Michelle Melendez McLaughlin. I am the Chief Underwriting Officer for the small business and commercial middle market at Chubb. Chubb is one of the largest insurers of small, medium, and large businesses around the world, with over 16,000 employees in 44 branches. Thank you for inviting me to speak regarding pandemic risk and our ideas for creating a public-private partnership that includes risk sharing by the insurance industry. My role gives me a unique insight into the economic effects of pandemics, especially for small business consumers, and I appreciate the opportunity to discuss our perspective with you. As COVID-19 has shown, pandemics are not only tragic in their impact on people's health and lives, but also devastating in their impact on the economy and people's livelihoods. We believe the insurance industry has an important role to play alongside the federal government in providing assistance to businesses to blunt the economic impact of future pandemics. Some risks can create losses so great that they are not insurable in the private insurance market without substantial government support. Pandemics, unlike other catastrophes like wildfires and hurricanes, are not limited to a specific geography, time period, or risk class, but instead can affect entire economies and almost every business. The private insurance market cannot underwrite the shutdown of the U.S. economy, but with substantial government involvement, the insurance industry can and should have a meaningful role in providing coverage as part of a public-private partnership. Industry involvement will lead to greater understanding of pandemic risk, better preparedness, and improved mitigation. Chubb has some ideas and created a framework to help Congress think about ways to do that. Our proposal has 2 components built around 5 key attributes. We need a program that provides a meaningful role for the insurance industry to share pandemic risk with the government, a structure that recognizes the immediate needs of small business, provides affordability and choice for small businesses with strong incentives to purchase coverage and timely claim payments in crisis. A program should provide incentives for broad participation by the insurance industry and be fiscally responsible. The first component addresses the needs of small businesses, and the second focuses on middle and large businesses. We have bifurcated the program because pandemics affect small and large businesses differently. They require a different approach. The details are included in my written testimony, but briefly, Part 1 is for small businesses. It provides coverage for up to 3 months of payroll, plus other expenses such as rent and utilities. Claims are based on a predetermined amount and paid automatically when the program is triggered. This provides policyholders with certainty that they will receive timely financial assistance after an event. The industry share of the risk increases from $15 billion in the first year of the program to $30 billion over 20 years. To address the concern that some insurers might not have the financial capacity to assume risk, each individual insurer's retention is based on its market share. So a smaller insurer with less market share would assume less liability under the program. Policyholders would only pay for private sector coverage, not the government-provided assistance, which keeps premiums affordable. Part 2 creates PAN-RE, a federal reinsurance facility for businesses with more than 500 employees. Private insurance companies that choose to sell coverage would write pandemic policies at market terms and retain some portion of the risk. The rest would be reinsured to PAN-RE, which would be paid adequate rates for providing coverage. Purchase would be voluntary, and insureds could elect 1 to 3 months of coverage with a maximum payout of $50 million per policy. We estimate PAN-RE's exposure would be $400 billion, with private insurers absorbing $15 billion of that in year 1, increasing to $30 billion in year 10 of the program. Our proposal is one of several that have been suggested in recent months. The framework might not answer all the questions, but we believe addressing the unique needs of small, medium, and large businesses and a significant risk-taking role for the industry is critical to the success of any program. We appreciate your interest in Chubb's perspective and look forward to working with you on this critical issue. Thank you.
And thank you so much, Ms. McLaughlin. And now we will recognize Mr. Kuhlmann, Mr. Lehmann. Mr. Lehmann, you are recognized for 5 minutes to give an oral presentation. You may proceed.
Thank you, Chairman Clay, Ranking Member Stivers, and members of the subcommittee. I'm R.J. Lehmann. I'm a senior fellow with the International Center for Law and Economics. I concur with the other witnesses that the problem of pandemic risk is one the insurance industry cannot solve on its own. I would go further and raise the question of whether insurance is actually the best structure for this problem. Insurance is a system of risk transfer. It is not a system of economic assistance. The committee has heard from me before on the dangers of moral hazard in insurance, and I'm going to be clear that I don't actually have those concerns about the proposals before you today. I would if the plan were to backstop workers' comp or liability. That's where you really do need price signals to signal to businesses to invest in mitigation and protect their employees and their customers. Business interruption is a different story. There's no moral hazard because there's nothing a business can do to avoid a pandemic. So there may be a role for the federal government to support business interruption, but understand the limits of that approach. Only about a third of businesses have business interruption, and less than a third would end up buying pandemic business interruption. PRIA would remove virus exclusions from commercial property insurance policies, but that doesn't mean it would end claims disputes. Any property insurance claim, including for business interruption, needs to show damage to the property. The legal theory in COVID claims that surface contamination is physical damage is a bit of a bank shot. Most business closures have nothing to do with contaminated surfaces. Businesses have been closed to avoid transmission between people. That's not covered by property insurance. Also, does a pandemic claim require there to be a shutdown? Because business plummeted before any shutdowns. It plummeted in places where there were no shutdowns, and it stayed depressed long after the shutdowns were lifted. Business fell because consumers did not want to be infected. There is no insurance claim for that. The best argument for a public-private partnership is that insurers can help policyholders to mitigate risk. But it's important to ask, mitigate the risk of what? It's not the risk that a business is unsafe. As I mentioned, that's on the liability side. The risk you'd be trying to reduce is the risk that a business will shut down. But in a pandemic, we want businesses to shut down. We want them to have a safety net so that they can shut down and survive and not lobby to lift lockdown orders. Because that's how you get the situation where schools are closed, but bars and gyms are open. So speaking as someone who has long preached the gospel of risk-based insurance, I'm telling you that you do not want this to be a risk-based program. A risk-based program would mean tech firms that can work remotely would pay the least, but restaurants, community theaters, and churches would pay the most. I don't think that's the outcome you want. So also just consider how much has changed since proposals like PRIA and the BCPP were introduced. I consulted with the trades on the BCPP. I think the 3-month benefit cap was my idea back in April. That seemed generous. It doesn't look like that now. PRIA originally was a $500 billion program. It's now a $750 billion program. Not only is that clearly not enough, but given that it's structured as one pot of money, if it were in place during COVID, it would all have been eaten up by New York before we got to the second wave or the third wave. So we can try to draw some lessons, but let's be humble about how little we know even about the current pandemic. The lessons I draw is that you want broad participation with a bias towards small business. Large businesses already have a lot of insurance options available to them, including captives, which I suspect we'll discuss more today. This shouldn't be just an insurance industry program. Get the banks and the payroll processors to help market it. When it comes to distributing benefits, you don't want to go through the claims adjuster process. There aren't enough adjusters. The process takes forever. And as I mentioned earlier, some of those claims will end up in court. The BCPP idea of a parametric trigger is much better. Get the money out the door as quickly as possible. BCPP also specifies the benefits can only be used for items like payroll and rent. You can argue that either way, but lawmakers should understand that's not how business interruption usually works. A business can make an interruption claim and at the same time lay off all its employees. Another option is just to let the states create their own programs and have Treasury partially reimburse them. An upside to that is you wouldn't have to run on the bank danger that PRIA poses. Above all, my recommendation is to take your time. Ad hoc solutions might be as good as it gets. Get help to the businesses, workers, and communities who need it right now. Don't legislate for the next pandemic while we're in the midst of the current one. Thank you, and I'd be happy to answer any questions.
Thank you so much, Mr. Lehmann. And now we will go to Mr. Kuhlmann. You are now recognized for 5 minutes. Let's hope we can hear you. Mr. Kuhlmann, you can unmute too.
Thank you, Chairman Clay, Ranking Member Stivers, members of the subcommittee. Thank you for the opportunity to be here today. My name is Brian Kuhlmann. I am the Senior Corporate Counsel for Shelter Insurance Companies. Shelter is a mutual company that is headquartered in Columbia, Missouri. It was founded in 1946 primarily to serve the insurance needs of Missouri farmers. And our success has enabled us to grow into a company that now writes auto, property, business, and life insurance in 21 states, and even conducts businesses internationally. I'm here today on behalf of the American Property and Casualty Insurance Association, APCIA, and the National Association of Mutual Insurance Companies, NAMIC, which together represent more than 90% of home, auto, and business insurers in the country. When the COVID-19 pandemic first hit earlier this year, Shelter took prompt and strong action to serve the needs of our policyholders. As a mutual company, we exist because of our policyholders who have put their faith in us and expect us to be there when they have a claim. Since March, we have provided premium relief, liberalized grace periods, and worked with policyholders on a case-by-case basis to help them through their current financial challenges. Additionally, the Shelter Foundation is offering each of our 1,400 agents each $1,000 to designate for a charity in their areas working to respond to local COVID-19 needs. Shelter is known for doing the right thing, and we will continue to respond to this rapidly evolving situation. We will continue to do the right thing by our policyholders, our agents, and our employees. Our business is to help provide consumers with peace of mind by developing risk solutions. As this committee and Congress go about the important work ahead of planning for future pandemics, however, it is imperative that we understand a core principle. Not every risk is insurable. The reality is that insurers and insurance regulators across the country understand the global pandemic risk is generally uninsurable in the private market. This was true before COVID-19 and will be true after COVID-19 for a number of reasons, including that it is impossible to diversify pandemic risk and to spread losses across different groups, which is a fundamental tenet of insurance. COVID-19 is affecting tens of millions of businesses simultaneously, and the number of businesses in need of protection greatly exceed the capacity of the insurance industry to provide that protection. Understanding that global pandemics are uninsurable, an alternative mechanism will be necessary to protect businesses from future pandemics. Whatever that mechanism looks like, it should be focused on providing real, efficient, and effective financial assistance to all American businesses and nonprofits. Our industry believes that our risk expertise and infrastructure can help with the pandemic solutions, even if we cannot shoulder the direct financial burden of the pandemic losses. To that end, we have studied relevant catastrophic protection models, met with many stakeholders and businesses, and put together a proposal called the Business Continuity Protection Plan, or the BCPP. Modeled loosely after the War Damages Insurance Corporation created by Congress during World War II, the BCPP would provide a straightforward revenue replacement solution for businesses and nonprofits of all sizes. The BCPP would set up a program in the U.S. Treasury to administer a federally subsidized revenue replacement product available to any business or nonprofit in the U.S. America's small businesses could access the product through a simple application to purchase up to 3 months of up to 80% revenue replacement distributed through licensed insurance professionals. Businesses could then use these funds to pay salaries, rent, and other operating costs during the pandemic. A parametric trigger mechanism would eliminate the friction to ensure a quick, automated relief upon the occurrence of conditions established in advance. This process would put cash in the hands of businesses immediately, avoiding a long, detailed coverage analysis or complex claims adjustment procedures. Responding directly to stakeholder feedback, the PCPP also contemplates an excess program and event cancellation provisions for customers who seek this additional protection or are in need of more specialized coverages. Most importantly, the BCPP is also the current proposal that would be most affordable for America's small businesses. Even with a federal backstop, coverage under the other proposals would likely be far more expensive than most businesses can afford. Because pricing for the BCC product would be federally subsidized, the cost could be made more affordable than the other proposed programs, thus encouraging a high take-up rate, which is essential for preserving the broader economy during a crisis. APCIA and NAMIC are appreciative of the ideas and the proposals that have been brought forward by congressional leaders and the business community to address pandemic risk challenges. We are committed to working with you on solutions that can provide the effective and affordable protection. Thank you very much.
Thank you, Mr. Kuhlmann. Let me thank all the witnesses today for their testimony. We will now move to the questioning of witnesses, and I recognize myself for 5 minutes. According to the National Association of Insurance Commissioners, over 184,000 business interruption claims have been made during the COVID-19 pandemic, and less than 1% of these claims have been paid out. I would make the point that to own and operate a business in this country, you should not need a battalion of insurance lawyers at your side to understand and make claims on your policy if necessary. And most business owners are not experts on business interruption insurance, exclusions, and other obtuse language that is frustrating to understand, especially when you are trying to pay your staff, deal with payroll taxes, and protect against other potential liabilities. Ms. Cantrell, and this is for you. Can you please share for us the policyholder perspective here? What kind of toll has this pandemic had on businesses like your own, especially the many businesses who believe they had policies that would protect them?
Yes, thank you very much. Many of my colleagues, quite honestly, have closed their businesses, not able to survive. And this is devastating in so many ways. One colleague had 34 people working for her, another's been in business for 18 years. It's been stressful all around and just trying to figure out what our next moves will be.
Thank you for that response. And Mr. Kuhlmann, after the terrorist attacks of September 11, 2001, lenders would not support major construction projects without first guaranteeing that the project had terrorism insurance, which at the time was virtually unavailable or extremely unaffordable. Congress responded by passing TRIA in 2002. Today, we are considering the Pandemic Risk Insurance Act, which is based largely on TRIA, although the cost to insurers of a terrorism event is immense. The scale of a pandemic is even bigger. Mr. Kuhlmann, are pandemics and terrorism events comparable enough such that a TRIA model can be used to provide affordable coverage for pandemics too?
Thank you for your question, Mr. Chairman. I don't believe that it is a acceptable model. Terrorism risk is by its very nature a very different risk than the pandemic risk. The terrorism risk is something that is localized, and the risk itself can be spread out throughout the country, whereas the claims that are paid out would be localized to one certain region. A pandemic, on the other hand, is something that is occurring simultaneously across the country with claims that would have to be paid out simultaneously throughout the country. And it's just a very different risk. Thank you, Chairman.
Yeah, let me follow up with that. You know, while largely successful, TRIA has faced criticism for relatively low take-up rates among small businesses. In attempting to replicate TRIA, the TRIA model for pandemics, is there a risk that we are replicating the weaknesses as well?
Thank you, Chairman. I do believe that that you would indeed exacerbate the problems that you outlined with TRIA. That we don't necessarily feel that all the criticisms are warranted of TRIA, but I think basing this on a similar model would exacerbate that because of the inability to spread the risk.
Yeah, and are there other ways to strengthen the TRIA model if we are to use it for pandemics, or do you have any thoughts on that?
I think the risk is, as I said, Mr. Chairman, it's just a very different risk that I don't think can be based off of TRIA for this purpose. I think the product would be unaffordable too. Thank you.
Fair enough, and thank you. And I now recognize the distinguished ranking member for 5 minutes, Mr. Stivers. Let's see, Mr. Stivers. Unmute. Okay. There you are. Yes.
Thank you, Mr. Chairman. Mr. Chairman, I appreciate those questions. Going to step back and looking at the scope and scale of TRIA compared to PRIA, the risks, because I think there is some big differences here. You know, I think it's hard to make the TRIA model work for a pandemic. My first question is to Mr. Doyle. Mr. Doyle, thanks for being here today. You know, with the current version of PRIA capping liability at $750 billion, assume for a second we have to shut down the United States economy for 2 months. And analysts have said it's about $1 trillion a month. Assume it's a 2-month shutdown because of the next pandemic. Anything above $50 billion, who would be responsible for that? And how does that work? Because that's more than the total reserves of the entire property and casualty industry.
Yeah, thank you, Congressman. As you suggested in your opening remarks, as did the chairman, we applaud Congresswoman Maloney for putting a proposal on the table. There's no question it has limitations, and as some of my fellow participants on this panel testifying before you today, the economic consequences of a pandemic are quite different, or can be quite different than a terrorism event. So we would need to find a way to scale up that capacity, depending upon, again, the overall ambitions of Congress.
Wouldn't, just for the record, wouldn't it be true that above that $750 billion limit, insurance companies would be on the hook for it until they're completely broken and bankrupt?
I think that's right, Congressman, or they would be reluctant to participate, presuming that voluntary participation.
Is because of that, I think you'll find almost no insurance companies that would be willing to participate in the current model that we're talking about today of the draft legislation. I think that is sort of the key. And if people won't participate, it won't work. So I really appreciate that. By the way, I appreciate our conversations when we've talked about, and I appreciate you taking a principles-based approach. I think we all need to take a step back, start with a principles-based approach, and then sit down as a big group and figure out a way forward on this. It may be an insurance-based approach. It may be another approach. Frankly, I do like building private capacity, but I am troubled by the fact that it's hard to make government takings an insurable risk. What we can do is cap the liability of each individual insurance company so that at some small level, and they grow it over time, doesn't bankrupt anybody, but I don't think we can truly make this an insurable risk. And I'd like to ask Mr. Kuhlmann, do you believe there's any way to make this an insurable risk?
I think by its very nature, I don't believe it could be. I think the fact that you would have this occurring at tens of billions of business or tens of millions of businesses at the same time.
Okay, so assuming we can't make it an insurable risk, if we did use an insurance model and every insurance company had an exact dollar stop loss, how comforting would that be to you, depending on obviously where that stop loss is? And then we'll talk about what that means to a federal program next in a second. Sure.
I think, Congressman, that using an insurance-based model, you also have to factor in the adjusting process for that, and the cost and the time of the adjusting process for that, and the affordability.
Assume for a second it's a parametric trigger-based approach, and not because on a pandemic there's not time or scale for the adjustment process. So assume for a second it's a trigger-based parametric approach.
What I would be concerned about, I think, if we look at this current COVID pandemic, we've had wildfires in Colorado, we've had a tornado in Arkansas, we've had hurricanes in Louisiana. These are our policyholders that we have that we're there for, that we're paying out and taking care of, and to do that at the same time with a
seconds here. So I would like to, because you do be interested in answering that. Ms. McLaughlin, would conversations with your CEO at Greenberg I've talked to you about, and conversations with him about that's an equally important part that's missing here.
I'm sorry, Ranking Member Stivers, I had a hard time hearing your question.
Oh, I was asking if you've had any conversations with your CEO about event cancellation. I've had some extensive. Have you?
About our event cancellation cover, certainly our proposal really is trying to cover Main Street America. So the proposal that we've put forward really doesn't contemplate event cancellation, but certainly it's a framework, sir, so we can expand it as we see that it's needed in the future as well.
I yield back about. Thank you.
The gentleman's time has expired. I now recognize the chairwoman of the Small Business Committee, the gentlewoman from New York, Ms. Velasquez, for 5 minutes.
Thank you, Mr. Chairman. Ms. Cantrell, it's very nice to see you again. Ms. Cantrell, I've been so concerned about the impact of COVID-19, how it's impacting our nation's small businesses, that back in May, we held a forum in my committee on business interruption. I just would like to ask you, hold on a moment. Do you think that if we had a program in place like the one that we are discussing here today under the Pandemic Risk Insurance Act, your business will be in a stronger financial position and better prepared to withstand the economic downturn caused by the pandemic?
Well, absolutely. Absolutely. It would have been a game changer for me and countless others in our community and around the country. Absolutely.
Thank you. Mr. Kuhlmann, since the start of the COVID-19 pandemic, the insurance organizations that you're representing here today have consistently maintained that pandemic business interruption is an uninsurable risk. Instead, your organization has proposed the creation of the Business Continuity Protection Program. First, can you explain why you believe pandemic business interruption is an uninsurable risk? And then can you explain how the Business Continuity Protection Program will work?
Sure. Thank you, Congresswoman. As I've said previously, that I think it is an uninsurable risk, certainly for small and medium-sized insurers such as Shelter, where you would have millions of claims all at the same time throughout the entire country. It's just something that would not be an insurable risk for us, and I don't think, quite frankly, for most companies. But I think the BCPP that we have proposed, it would be a program that would have a parametric trigger where, because it is a federal program and it would be subsidized by the federal government, there would be premiums that would be paid, but they would be affordable for small businesses, for nonprofits throughout the country. And it would be delivered through the agency network that is currently out there and highly regulated by the states. People would be able to buy and purchase either up to 80% of their lost revenue for up to 90 days. And I think it would be very good.
Thank you. I just have other question. Mr. Doyle, Marsh was one of the first companies to advocate for the creation of a public-private pandemic risk solution. First, how would you respond to what Mr. Kuhlmann just said? And second, can you explain why Marsh believes that if the right incentives are created, insurance companies will be able to serve their traditional function of mitigating risk?
Yeah, thank you very much for the question. I recognize it's complex. I recognize it's a unique cat risk. We've talked about the lack of diversification a bit, but we have many clients, just like Ms. Cantrell's business, who are suffering and are under great distress at the moment, and they need us to tackle hard at the moment, which is why we're here. I fundamentally believe in the social benefits of insurance. We'll be able to, if we structure the program in the right way, invest in new technologies, better collect and manage data, to build models and new ways of working. I'm right now sitting in my office in New York City in Midtown Manhattan, my experience coming to work today was very different than my experience was on March 12th. And so we need to begin to take those steps to harden infrastructure and to bend the risk curve for the next pandemic.
Thank you, Mr. Chairman. I yield back.
Thank you so much, Ms. Velasquez. And now I recognize the gentleman from Florida, Mr. Posey, for 5 minutes. Mr. Posey.
Thank you very much, Chairman and Ranking Member, for holding this meeting today. I appreciate the well-intended efforts of the sponsor to help small businesses. But I'm afraid essentially what we have here is a proposal for another government program that will try to do what the market won't do on its own without subsidies. We're being asked to underwrite a government program to insure business losses and do so at premiums that cannot possibly actuarially cover the payouts for such losses. Mr. Lehmann, from a social policy point of view, is there any economic justification to subsidize insurance for business interruptions due to a pandemic, but not to do so for interruptions due to a financial crisis, such as the one we had in 2008?
It's that would be a difficult distinction to make. I can see in both cases why there is a role for government to provide assistance. Whether there's a need to create an insurance program, and whether an insurance program is the best way to spend $750 billion is less clear to me, particularly when, as I mentioned earlier, only a minority of businesses have business interruption. If you don't have a business interruption policy, and if you do not own your property, you often will not have a business interruption policy, then you would not possibly benefit from this program. Could that $750 billion be spent better in directly aiding businesses? I think likely. And I especially think let's get to that. Let's get through this pandemic first, provide help that we need today, and then we can get to the point where we can ask that question about future pandemic.
Thank you for the very complete, concise comments. Mr. Kuhlmann, we hear about flaws in proposal that is modeled after the terrorism risk insurance program. I voted for a long-term TRIA reauthorization last year since it fills a critical role in the terrorism insurance market. But in this case, there's no existing market for pandemic insurance that's failed as it had before the creation of TRIA. And it's obvious to me we can't try to force something that's uninsurable like pandemic risk into a terrorism model. I think that it just simply won't work and will lead to lower insurer and business participation due to incredibly high costs that come with trying to tie pandemic coverage to a risk-based pricing system. Can you elaborate on this point a little bit?
Absolutely. I think that Congressman, that is exactly the point that we would make, is that I think that trying to either force the coverage onto companies, or even if you make it voluntary, you would have not a great take up among insurance companies, and then even it would be unaffordable and less take up among insureds themselves. And I think it would then become even more expensive with less participation.
Okay. Thank you. Now back to Mr. Lehmann. We have various models for dealing with rare risk in this country now. For example, the National Flood Insurance Program, another heavily subsidized program, and the entire range of programs under the Disaster Relief Fund provide a form of insurance for rare events like floods, hurricanes, and earthquakes. The government is, in this case, the insurer of last resort, so to speak. Rather than creating an insurance program that is designed by captives and has associated moral hazard, we could integrate business loss assistance into the Stafford Act along with cost sharing. Wouldn't that be just as effective as a subsidized insurance program like TRIA, provide us greater control and also achieve integration with the FEMA programs that are addressing the current pandemic? Just would appreciate your thoughts on that.
A good argument can be made that the pandemic is more like a public catastrophe than it is like, an economic assistance program. And so that Some versions of the BCPP over its drafting, I know, considered something like that. I think the Stafford Act is a way to at least respond to sort of the public closures, right? Like that piece of it where you have a public health authority that orders closures, that is a public responsibility, and it's like a taking. And reimbursing people to comply with the taking makes good economic sense.
Thank you. We often hear arguments that insurance, if it's actuarially and fiscally sound, helps a firm make a rational.
The gentleman's time has expired, and I'm going to, because of the large list of members who are waiting to ask questions, I'm going to have to ask you to not ask that question. I'm sorry, Mr. Posey. Will you yield back?
Certainly.
Thank you, Mr. Posey. At this time, we will now go to the gentleman from Missouri. Mr. Cleaver, you are recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you for holding this hearing. It is extremely important that we deal with this issue. And what I want to understand, focus on is, I understand the varying PRIA program proposals, but that have been offered, which involves the retention of some amount of risk by private insurers for different types of business interruption insurance vehicles, depending, of course, upon the size of the policyholder. I'd like to engage our panel just for a bit on this issue, and I want to specifically talk about the risk tolerance of private sector before it makes sense for the federal government to intervene. So I'd like for the witnesses, if you would, to discuss the broad tolerance of the insurance market under various adverse situations. Is the FIO or any other independent analytical body effectively evaluating this question? And if so, when can we expect some data? I mean, aren't we just kind of out blowing in the wind right now? Any of the panelists, please.
Yeah, Congressman, I'm not aware of FIO conducting any research on this question yet. The FIO, I would imagine, is currently in transition, and we'll see if they do take. I do think that it would be wise to direct FIO to examine the question of availability of coverage for business interruption and other coverages. Business interruption is not the only insurance coverage that's been hit by the pandemic. Workers' comp, many liability claims, those are the things that need to be looked at as well.
I mean, we're dealing with an extremely important program, and as far as I know, we're dealing with it without the data. I mean,
I do believe that the NAIC has had some data calls. I think some of the other witnesses might be able to speak to that.
Yeah, please, any other witnesses, please speak to it.
Congressman, this is Michelle McLaughlin from Chubb. At Chubb, we've been designing our program, and we have the data for our own company, obviously. And what we're looking to do is create a program that insurers can have some skin in the game here, but with guardrails. So really our program, if you've seen from a small business standpoint, is to limit the exposure by the insurance carrier's market share. So we have a finite exposure, and then charge actuarial sound rates to those carriers only for the insurer's portion so that it is affordable for those small businesses.
Thank you very much. On June the 22nd, I sent a letter to the Department of Treasury's Federal Insurance Office, FIO, asking them to work on or work in coordination with the industry and relevant stakeholders in providing an assessment of the pandemic insurance landscape, as well as any efforts underway at FIO to address possible shortcomings. I think that this is the United States Congress. This is an important issue. And I think we need to have data that everyone is dealing with, that everyone can at least understand its parameters. And right now, if let's just say this is a big deal, but if we had to vote on something today, we would be voting in ignorance. We have no data. And I just don't think that with an issue like this, as significant as it is, that we would wade into the water without having an organized system of presenting data. Am I off on this? You can tell me that I'm off. It's all right. My wife says it.
I think you're absolutely right, Congressman.
Any other witnesses? So what does the silence mean?
Congressman, I think we would support you getting that information, certainly, and I believe that the NAIC is also looking at trying to gather some data. So yes, we'd support getting any data that we can to review that. Thank you, Congressman.
Thank you, Mr. Chairman.
You're very welcome, and I'm sure your wife is not fearful of telling you the truth. Thank you to my friend from Missouri. At this time, we will now go to the gentleman from New York, Mr. Zeldin, for 5 minutes.
Well, thank you to Chairman Clay, Ranking Member Stivers for holding this hearing today, and thank you to the witnesses for being here. I represent New York's 1st Congressional District, which was one of the areas first and hardest hit by COVID-19. Long Islanders are tough and have found ways to adapt to the pandemic, but many businesses in my district are facing difficult decisions as we reach the colder months in New York. Restaurants, gyms, and other small businesses are once again facing increased restrictions on how and when they can operate. Congress did a great job coming together, not as Republicans or Democrats, but as Americans when we passed the CARES Act, which enacted the Paycheck Protection Program to provide needed liquidity for our small businesses. It's vital that Congress comes together again and passes another round of PPP funding to help businesses weather any government-placed restrictions. It's also important that we start thinking about ways to have liquidity measures ready and in place to assist small businesses with any potential future pandemics. I'm grateful Representative Maloney, a fellow New Yorker with whom I worked to reauthorize TRIA, has started an important conversation about how to be more proactive for future pandemics. However, I want to dig a little deeper into whether an insurance product makes the most sense, or if there are other potential solutions that would provide liquidity more efficiently for Long Island small businesses. Mr. Kuhlmann, one thing we learned from this crisis is the importance of getting cash quickly to small businesses that are forced to shut down through no fault of their own. Can you talk a little about the difficulties of using a business interruption insurance product and that claims process during a pandemic?
Absolutely. Thank you, Congressman. Yes, using a claims-based process you would have to have specialized adjusters who are handling these claims, and it's almost a form of forensic accounting that is necessary to be able to evaluate the claims. And even doing that as efficiently and quickly as possible is still going to be not as timely as is going to be needed in a situation like a pandemic. And it's also very expensive, which will add to the premiums.
Is there a more efficient way to provide liquidity quickly to businesses that is not business interruption insurance?
Well, certainly. We feel that the BCPP would be a way with a parametric trigger that would be able to almost immediately get funds into the hands of the policyholders in that regard.
Mrs. Melendez McLaughlin, pivoting slightly, business interruption insurance is a product that could be triggered by physical damage to property. However, there are other specialized insurance products out there like production insurance or event cancellation insurance that are critical for financing film productions, sport events, and other live events. Is there a role for the federal government to play to help these markets regain insurance coverage?
Thank you, Congressman. Really, the proposal that we've put in force is meant to address Main Street America, but certainly we think we've created a framework that once we've got all of the elements combined together, we can expand that to include future types of coverage like you mentioned here today.
Mr. Lehmann, after 9/11, construction halted in New York City because lenders did not want to extend credit without protecting the underlying collateral from a future terrorist attack. Congress correctly responded with TRIA to make sure that lending and financing for New York City's recovery would be strong. Many of our nation's lenders have stepped up and provided forbearance to help businesses that do not have the cash flow to meet scheduled debt payments, but this is unsustainable in the long term, and a proactive solution would be preferable. Whether or not an insurance product is the best method, do you foresee market forces leading to a necessity in creating proactive solutions to provide liquidity to small businesses during a pandemic so that these loans are safer and sounder?
It's possible. I'm a bit skeptical of that because in the case of terrorism, the market, the insurance market, pulled back coverage that had previously existed. They introduced exclusions that weren't there before. That's not the situation we're facing here. No business had, or very, very few businesses had coverage for a pandemic before COVID. Lenders have been providing that they're lending all along. I don't imagine lenders are going to ask for an insurance product that does not exist. I think lenders still want to do business, and they're not going to foreclose that there is no market for what they have to be demanded.
Thank you. I yield back.
Thank you, Mr. Zeldin. At this time, I want to recognize the chairwoman of the Diversity Subcommittee, the gentlewoman from Ohio, Miss Beatty. Miss Beatty, are you there? If not, we'll come back to Miss Beatty, and I will now recognize a gentleman from Texas, and the subcommittee chair of investigation, Mr. Al Green. Mr. Green.
Thank you, Mr. Chairman. Thank you very much. And thank the ranking member and the chair of the full committee as well. Ms. Cantrell, your testimony was quite moving. Be very candid with you. I recorded one phrase that you used. You indicated that you were experiencing the darkest days of your life. And that caused me a lot of concern, because if I multiply this by all of the many persons who were in similar situations, it means that there was a lot of hurt, a lot of pain, obviously. And for me, as I review this, while it's about individual businesses, I have a statement from the staff indicating that losses just for businesses with under 100 employees during the pandemic in the spring were as much as $431 billion per month. It says to me that this is really about the economy. Small businesses make up the economy. And I'd like to see us arrive at a solution, if at all possible, to be very honest, because the economy impacts everybody, not just the individual businesses. So I'd like to see a solution. And I'm willing to work across the aisle to try to accomplish such a solution. But Mr. Cantrell, I do want to ask you about something related to policies in general. Were you of the opinion that you had coverage for a pandemic at the time you were experiencing these dark moments in your life?
Yes, when I had been, thank you very much for your question. And yes, when I had been paying into insurance, I thought I was covered for all situations. I never thought of, there's many things I'm sure that insurance companies think of that I, as a business owner, would not think of that. I guess that was one of them that, but I certainly absolutely thought I was covered. And the main topic with all of my colleagues when we speak daily, and for those months, those really dark times, we're still in them, but was about how we're going to pay employees, payroll protection, getting that, and then insurance as well. And many of us spoke about how we had been paying in for years into something that wasn't going to help us now.
Well, that is a concern that I have, and your testimony really sparked this interest. And I've spoken to staff members since you made that comment because of how it has impacted my thought processes. Would it have been beneficial to you, ma'am, to have had a notice, some disclosure that was clear and concise, such that you would know what you were buying? Do you think that had you known, while it may have been difficult for you, it wouldn't have been something that you had an expectation otherwise for? For example, you wouldn't have thought that you would have the coverage that you didn't have, and so you wouldn't have had that expectation, because I'm sure that was quite a letdown for you when you found out. So would disclosure have at least helped you to some extent, or caused you perhaps to decide that you needed to look elsewhere for some insurance for that kind of coverage? Would disclosure have helped you?
Well, I understand what you're saying. I think hindsight is 2020. I certainly will be more, whether it's my lease, whether it's my insurance, there's so many things that the pandemic has opened up about what I need to ask for going forward. I'm hoping that the government helps in some ways with some of those things. Would it have helped? I wouldn't have known to ask for it. Now, like I said, I certainly would have. I think that there was so much uncertainty. There still is so much uncertainty and so much hope about that things would be
my time
better.
is kind of limited. Let me just forgive me for interrupting. Okay, but what I'm trying to get at is, would it be beneficial for me to work with staff to work with some sort of disclosure so that you won't feel like you paid all over these many years and then find out that you don't have what you thought you were purchasing? And if that disclosure is beneficial, then I'm going to look into developing such a thing for you and others.
I think disclosure would be great. I don't know how many business people are reading every fine line and everything to know what is and what is not covered. When I talk to my insurance company and he's saying, this will cover you in all situations, that is what I listen to.
Okay, my time is up. I thank you, Mr. Chairman. I read my policy once and I hope that I never have to read it again.
Thank you so much, Mr. Green. And now I would like to go to the gentleman from Tennessee, Representative Kuhlmann. You're recognized for 5 minutes.
Thank you, Chairman Clay. Thank you for convening today's hearing, and thank you to the ranking member. And I also want to thank the witnesses who are appearing virtually today. Ms. Cantrell, if I could, if you're still on. Okay, you are still on. I want to echo what Congressman Green said about your testimony. I found it compelling. I think everybody who listened to it found it compelling, and we probably all have constituents in our districts we've heard the same or similar stories to. My question to you, kind of following up on what Congressman Green was asking you, if PRIA was in existence, or if you had the coverage you thought that you had, or the business continuity protection program was in existence, you had to litigate your claim, what would the effect be to your business?
I'm sorry, if I took legal action against my insurance company?
If you thought you had, if the coverage did in fact exist, but you had to litigate, what would the effect be to your business?
Quite honestly, I don't have those resources to take on an insurance company. And having talked to my insurance company since this time too, he made some point about that if in good faith, if we don't try to work things out with our insurance company, then my coverage would cease as well. So I it never occurred to me for litigation. That is not in my mindset. And I didn't really think, I'm David Goliath, it didn't really think it was going to work in my favor.
Same question. Well, if you didn't have to litigate, but it took, say, 6 months for you to get your claim paid, what would the effect be to your business?
If I knew there was hope coming, I felt that way with the PPP, and then that was something that was very, could be really helpful and supportive and keep us going. I can't speak for others, but I think that would be really, knowing something was, relief was coming, that would be helpful.
Fair statement, though. If you knew that it would take 12 months for your claim to be paid, it would have a detrimental effect on your business, wouldn't it?
12 months is a devastating time when your rent is really high and health insurance and payroll costs.
Yeah, I guess my point is you would really need that claim to be paid in a fairly quick manner in order to be helpful to your business, correct?
Absolutely.
Thank you very much. Mr. Lehmann, if I could, to you, the way you look at and read PRIA, the way it's drafted now, is there any prohibition for a policyholder, if PRIA did exist, to receive a payment, to have their claim paid, and then at some point in the relatively short-term future, lay off all their employees?
No, that wouldn't be unusual. I mean, you could have the insurance contract could specifically be insuring payroll. But that's going to depend on the contract between the insurer and the insured. The government is not involved in that process, and PRIA, from what I see, does not propose anything that would limit that from happening.
And Mr. Lehmann, if PRIA did exist the way it's drafted now, the claim was paid, then the employees were laid off, what would the effect be to the economy?
Generally speaking, I mean, the thing that we care about are these relationships between employers and employees, relationships between businesses and customers. The whole goal of PPP was sort of to put all of these businesses into like an induced coma, so that we could tackle the virus, then bring them back and hope everything comes back to normal. And it may not, in many cases, come back to normal, but that's how that was structured. I think that's a good structure. Insurance is not quite structured the same way.
And along those lines, if PRIA were created, can you talk about what the challenges would be establishing and running a new permanent federal program designed to affect pandemic-related losses?
Pandemic losses can be pretty. I mean, like TRIA has the certification requirement from Treasury. PRIA, public health is a local matter for the most part, determining businesses that cross different jurisdictions. Some piece of the business may be in a public health zone and some pieces not. That's going to take quite a bit of work.
Thank you, Mr. Lehmann, and I've got 19 seconds left. I'll yield back my time. Thank you, Mr. Chairman.
Thank you so much, Mr. Kuhlmann. I wanted to go to the gentlewoman who is chair of the Oversight Committee, as well as the person who brought this issue to the subcommittee's attention. My friend, Carolyn Maloney of New York, you're recognized for 5 minutes.
Thank you. Thank you so much, Chairman Lacey Clay. And let me express how much I've enjoyed working with you over the years and how sad I am that you will not be returning. I want to thank you for this hearing, for your decades of work to help so many people. I also want to thank the ranking member and all of our panelists that are here today. I'd like to ask Mr. Doyle, who's the CEO of Marsh, who incidentally was the only company that could insure New York without PRIA, along with Lloyd's of London during that time. We all recognize that pandemics are unique and the economic effects of pandemics can be devastating. A broad consensus has emerged, supported by research from your company and proposals like Chubb's, that pandemic risk is insurable with an appropriate federal backstop. I want first to thank Marsh for all the research that you provided on this issue. and I hope you can make it available to all of us. But I'd like to ask you, can you explain why any federal program must include a federal backstop? And also, if you could talk about the being able to insure pandemic risk. A number of panelists have said that they believe pandemic risk is totally not insurable. Your comment on that. And again, thank you for your research, and we look forward to hearing your comments.
Thank you, Congresswoman. My connection was poor before, so I didn't hear a few of the prior the prior questions from the committee. So apologies, but I could hear you clearly. And thank you again for your leadership on this issue. Again, pandemics are global by nature. They lack diversification. And so unlike other cat risks, diversification is a fundamental part of insurance. And so the economic consequences are too severe and beyond the risk-bearing capacity of insurers to ultimately bear. Many insurers have come forward, and we've had very constructive dialogues. Of course, Ms. McLaughlin from Chubb on the panel here today being an important voice. So many believe that the industry has a big role to play. And I would also submit that, with all due respect, shutting down businesses or putting businesses in a coma is not an ideal future state. We ought to be looking to ultimately change the outcome of the next pandemic.
Okay. Can't hear you. What? Okay, I gotta tell you, Mr. Chairman, can you hear me? I cannot hear anything now.
Yes, we can hear you.
Okay. All right. I wasn't able to hear his response, so I'm going to ask to get that response in writing for the question that I said. I know my time is almost up. I want to ask Ms. McLaughlin, my bill would require insurers to share the risk with the federal government. Chubb's CEO has said that he believes the industry, quote, does have wherewithal to take risk here, end quote. While your COO said it was a mistake for insurers to think he could not insure this risk at all. And Chubb's not alone. Other leaders have come out and said that they support it. Can you explain why risk sharing is possible and necessary for any federal program?
Thank you, Congresswoman, and thank you for your leadership on this as well. Chubb feels it is very important for the industry to participate in a solution by playing a risk-sharing role because of the industry's knowledge and experience can help drive better behaviors. We really feel the industry needs to have some skin in the game here. Our involvement in a partnership or a public-private partnership with the federal government will lead to a better understanding of pandemic risk and incentivize improved risk mitigation and preparedness. A solution that commits insurance industry capital also provides an opportunity for increased risk sharing over time as direct and secondary markets develop, thus helping reduce the government's financial burden in the future.
Okay, thank you so much. And Cantrell, thank you for your work in small business. How would pandemic risk insurance improve your business's ability to survive a pandemic?
Thank you so much. Yes, I mean, every other store that I see out right now has a for rent sign on it. So me and so many others would really have so much hope and financial stability for the future.
Thank you. Thank you. I just want to say that small businesses across the country have closed their doors forever. Trade professionals like the 2,200 organizations that signed the American Society Association's letter in support of my bill have canceled their annual events that provide the bulk of their funding without any event cancellation insurance. And despite what some have said earlier, this is included in my bill to cover pandemic-related losses. And I just wanted to get that to correct the but also to emphasize again, Mr. Chairman, this is just a marker. This is just a proposal, a draft, shall we say, to be improved upon. It is not, the end game. By any means, it's easier to work up a draft than to just go to a hearing without anything of a point of reference to build on. So I do want to say I'm open to all suggestions. Thank you.
Chairwoman
You're back. Thank you,
Maloney,
Lacey.
you're very welcome. We thank you for that perspective. That is just a marker. I appreciate hearing that. At this time, we will go to the gentleman from Tennessee. Mr. Rose, you are recognized for 5 minutes. Unmute for us, Mr. Rose. No? Mr. Rose? Oh, they're trying to get us on. Let's see you. Want to go to next? I'll tell you what, we will come back to Mr. Rose. Oh, Mr. Rose, are you there?
Mr. Chairman, it was taking a little while to unmute. He might be unmuted now.
Okay, he's not unmuted. There's still some difficulty. Mr. Rose, I'll tell you what, we will have to come back to you, and I will go to Mr. Stowell of Wisconsin for 5 minutes, and then we'll come back.
Can you hear me?
Yes. Okay.
You can hear me?
Now we can hear you, Mr. Rose. Go ahead, 5 minutes.
Okay, sorry, I was unmuted, but for some reason it must not have taken. Thank you, Chairman Clay. Thank you, Chairman Clay and Ranking Member Stivers for holding this important hearing. I know we have been trying to hold this hearing since June, so I'm glad we can finally discuss this important issue here today. The COVID-19 pandemic has devastated businesses nationwide. The government mandated shutdown led to massive furloughs, layoffs, and closures. Programs like the Paycheck Protection Program made it so that businesses across the country, including in my home state, could keep their doors open and their employees on the payroll. This program was critical because in nearly all instances, the financial losses our businesses faced were not covered by insurance, as we all know. As we begin to consider legislation to combat this issue in the future, I believe any legislation this committee approves must have a bipartisan consensus. It should include input from all stakeholders and require voluntary participation. The legislation attached to this hearing today fails to pass that test, but I do appreciate both the chairman and the bill's sponsor, Ms. Maloney, for recognizing this bill as a starting point and being willing to work across the aisle for a solution. There are many alternative solutions that have both their advantages and disadvantages and are worthy of further consideration as we seek bipartisan consensus. And I look forward to furthering that discussion today. The Pandemic Risk Insurance Act would require participating insurers to offer pandemic risk coverage as part of their business interruption policies. Setting aside whether the mechanics of PRIA would even work, this structure could lead to incredibly high cost of coverage. Mr. Lehmann, what would happen if insurers largely declined to participate in the program?
Right, and to answer the first part of the question, I don't believe it actually does require the insurers to make the offer, but they have the option to participate in the program. I don't imagine many traditional property and casualty insurers would be interested in participating. The administrative costs would be pretty large. There's not much of their own capital that's going to be contributed. They're only retaining 5%. But if the program is exhausted, if the $750 billion is exhausted, given the size of these sorts of events, they could be on the hook for money over that cap. And it's unclear how that would work out. I think it'll largely be of interest to specialty operators like captives and risk retention groups that will largely serve individual policyholders, large companies, some governments, and so forth. And that's what we see in TRIA as well, that a good portion of the TRIA backstop is ultimately flows to captives.
What would happen if insurers who did choose to participate in the program made coverage essentially unaffordable for most small businesses?
Right. I mean, given the cost of administering it, it probably would be pretty expensive, even without the insurer's own capital on the underwriting side. It's difficult to know what what this would look like. If it were risk-based, you would expect businesses that have indoor dining and those sorts of things, anything where there's person-to-person interaction would have more expensive coverage, and they would probably not opt to buy it because if you're a small business, that would be quite a bit. And you would, as you did before this pandemic, take the risk that it's not going to happen, usually, but for once in 100 years.
So, Mr. Lehmann, you have pointed out that the general difficulties of using insurance as a tool for spreading risk in a pandemic event. Several of the proposals being discussed in the hearing today include PRIA, including PRIA, follow the insurance model. Would you explain to the committee why the insurance model would not be an efficient and effective way to get aid to businesses?
I mean, the first part is just take up, right? As I mentioned, business interruption is only about a third of businesses have. So that means most businesses would not be affected by that. The other side of it is that a lot of the loss is not an insurance claim. Most of the lockdowns were lifted in this country in September. Ask businesses if they thought business was normal. It obviously wasn't, because it wasn't the shutdown that caused the loss. It was the pandemic. And there's no cognizable insurance claim for businesses bad. There is no businesses bad insurance.
Okay, thank you, Chairman. I see that my time has expired. I think what we've learned today is that this hearing is an important first step to solving a complicated issue, and I look forward to working with my colleagues on both sides of the aisle to find a solution, and I yield back.
Thank you, Mr. Rose. I couldn't agree with you more. At this time, I think I saw the gentlewoman from Ohio, Miss Beatty. Miss Beatty, are you still on? Okay, apparently she's not there, so we will now recognize the gentleman from Washington State, Mr. Denny Heck. You recognized for 5 minutes.
Thank you, Mr. Chairman. I'm not going to take that much time. I actually don't have a question, but a couple of quick comments I'd like to make, sir. The first of which is to thank the panelists very much. This is a profoundly interesting and important conversation. It is, of course, focused on prospective approaches to deal with what we're experiencing right now, but it does serve as an opportunity to underscore the severity of the circumstance we are in, and I don't think it can be exaggerated or repeated too often. American families and businesses are hurting on an unprecedented scale. The fact is that what we have done in the past in the form of PPP and unemployment extension, these have run out. Businesses have eaten, as my father used to say, their seed corn, and they are on the brink of wholesale bankruptcies. And it is incumbent upon this Congress to act to figure out a way to get to yes, especially as we head into the teeth of this frightening spike in the spread of COVID, even among our colleagues. We've got to figure out a way to act. And the second comment I want to make under a point of personal privilege is to express to you, Mr. Chairman, how much I have enjoyed and appreciated serving with you. I wish you all the best going forward, sir. I cannot exaggerate my gratitude for the collaboration we've experienced over 8 years, especially of late, your leadership on housing issues, and frankly, Mr. Chairman, your friendship. I wish you Godspeed. And with that, sir, I yield back.
Thank you so much. That's so kind. Let me now recognize the gentleman from Wisconsin, Mr. Stivers. Mr. Stivers, you recognize.
Mr. Chairman, thank you very much, and thank you for having today's hearing. Want to dive in on a couple specific questions, Mr. Lehmann. I'm going to direct them at you if I can. One of the things I think we haven't really hit here in this discussion is that historically our insurance markets are regulated at the state level. State insurance regulators are really required, and we rely on them to make sure that insurance policies are solvent. You kind of think back towards SARS when some of these pandemics came online, people became concerned. We have 50 states. Is it to your knowledge that all 50 states have allowed exclusions for pandemics in their policies to maintain solvency?
Yes, the exclusion for the viral exclusion does date to SARS and was promulgated by ISO, which is the standard setting organization for a lot of policy language, and that has been
cognizant of time, but
Sure.
big picture here, we have 50 different state regulators. All 50 state regulators across the country reached the same conclusion, to your knowledge, on that. So then what we're looking at is what would be the demand for this. If we have a lot of conversations comparing TRIA to PRIA. Under TRIA, we have 9/11. We have a lot of bank loan covenants that are coming online, demanding terrorism risk coverage. The free market is not providing that. Congress is called to act to address a real market demand. To your knowledge, is there a market demand by bank loan covenants or other market demand that is driving us forward as it would relate to providing this type of pandemic coverage at a national level?
I have heard anecdotal chatter that may be a thing lenders are looking at, but I know of no evidence that it's a common requirement. It would seem very unlikely for banks to require something that doesn't exist. It would mean they'd make no loans.
But in a sense, they did in TRIA, right? We saw the markets kind of start to glum up, if you will, for lack of a better phrase, following 9/11, where there was catastrophic loss, and Congress was called to act because there was a hiccup, for lack of a better phrase, as it related to providing liquidity, in particular in the real estate industry, as it relates to TRIA. But to your knowledge, you haven't really seen that play out on the financial side as it relates to pandemic insurance.
Not as yet. And one thing that is different is that TRIA, following 9/11, existing terrorism insurance disappeared. And so the lenders had that security before and they lost it. That's not the case here. We didn't have pandemic coverage before COVID, and we don't have it now.
And following SARS really was truly probably carved out almost explicitly in many of these programs. Can I ask you to comment? I think one thing that we haven't dove in as far as I would like, the triggering event that would be required would really shift in many ways from traditional insurance coverage being an actual occurrence of an event to a triggering event that would require possibly an act of Congress, an act of state government. And it seems like that would really set up a potential either moral hazard or political hazard. You could phrase it as you like, but you can envision the pressure that would be placed on the decision maker in a political environment versus a tornado catastrophically comes through a town. It occurred, right? I mean, there's no second guessing whether or not there was a tornado that came through. This would be a triggering event. Could you just comment on, are there other instances that you can think of where a government actor, a political actor would control a triggering event, and how that has played out as it relates to potential moral hazard?
So the only real comparison is to TRIA, where the Treasury Secretary has to certify a terrorist event. But we haven't had one. We've never had a terrorist event that's been certified by the Treasury Secretary. And then this, through the various proposals, BCPP, the Chubb, and PRIA, and so forth, they all kind of consider different stakeholders making those decisions, and that obviously can be complicated, and certainly there will, if it's a public official, will have pressure from the public.
Sure, but from a comparison standpoint, obviously TRIA would have that. Where people on this committee are pretty knowledgeable about how that trigger would work. But looking, you don't see other instances where what I'd consider free market private insurance is triggered by a political action rather than an event occurring.
Yeah, usually events are defined, and you don't need the government to tell you that they exist.
Seeing my time, I yield back. Thank you very much.
Thank you, Mr. Stahl. And now we will go to the gentleman from Florida, Mr. Lawson, and hopefully, Mr. Lawson, you can turn your camera on. Are you there?
Yes, how you doing, Mr. Chairman? Can you hear me?
Yes, I can see you now. Please, you have 5 minutes.
It's great to see you, and I want to thank you so much for this hearing. This is a real important hearing because it affects people and businesses all over the country. My question is, there was an article in the Philadelphia Business Journal, reporting that there have been over 700 lawsuits brought by policy owners against insurance companies that have denied businesses interrupted coverage for losses sustained as a result of COVID-19 pandemic. Insurers almost unanimously denying every claim across the country by taking the position that COVID-19 does not constitute a direct physical loss, or damage. The coverage, the covered property because of the virus does not physically alter the tangibly destroy the property like fire damage, any other damage. So I guess to Ms. Cantrell, can you please share for us the policyholder perspective about this issue? Because this is a pretty interesting issue, and I really need to know how the panel, what they think about that.
Are you asking about the litigation part of it?
Litigation part of it and how it affects, because, and I'll tell you, the reason why I'm asking that is because you're in the health insurance area and so forth. Insurance companies are looking at now, everybody have a pre-existing condition based on the virus and so forth. So how, there's so much litigation involved that people who are filing insurers are saying we denying all these because it does not alter property, you know.
Right. Yes, I understand. And as I mentioned earlier, I didn't file any illegal action, but we haven't sustained any property damage, but we were shut down by the government, the governor's orders. There was really nothing I could do. I luckily had a website, and that is how we were able to even function and make any money at all. So I find it maybe the language, and this is what we're talking about today, but the language isn't there to support small businesses or businesses at all. So I didn't take any legal action, but I see others have.
I'd like to know if anybody else on the panel would like to respond. I can't hear Cindy. Is that John speaking? Did I see any hands of anybody else on the panel that wanted to respond? If not, I have another for anybody on the panel. Then looking at two proposals, I noticed that there are conflicting thoughts on premium charges for federal backstop. However, given the challenges that private insurers face in providing business interruption and even cancellation insurance of pandemic risk, do you believe that some type of governmental backstop program may be necessary if pandemic risk insurance is going to ever be widely available to U.S. businesses? And this is for the whole panel.
I think the entire panel agrees that the private market alone is not going to cover a risk like the global pandemic. I don't think I think that's one thing that we all agree with. It's too correlated a risk. You're not going to have just a private solution. The government needs to do something. What that something is, we might disagree about, but that there is a government role, I don't think anyone disagrees.
Did anyone else care to elaborate on it?
Congressman, it's John Doyle. Can you hear me now?
Yes, we can hear you.
All right. Apologies. Look, I think we've been working on behalf of more than 10,000 of our policyholders to get their claims paid. In many cases, it is excluded, which is why we're here. We need a program that covers this risk going forward. We need to structure it in a way that encourages participation. It's subsidized by the government. It's got a quick and simple trigger to get liquidity into the system so we can keep Ms. Cantrell's business alive. And we need to create the right incentives to bend the risk curve over time. With all due respect to my other panelists, shutting a business down or putting Ms. Cantrell's business in a coma, I think we ought to set our sights a little bit higher than that.
The gentleman from Florida, your time has expired. I appreciate the line of questioning that you follow. And now we will go to the gentleman from Texas. Mr. Gooden, you are recognized for 5 minutes.
Thank you, Chairman Clay. I first just want to say how much of an honor it's been to work with you during my first term in Congress, and you will be missed, and I appreciate the time we've had together.
Thank you.
And also, Chairman Clay, without objection, I would like to insert the bipartisan bill HR 7671, the Small Business Comeback Act, along with a list of supporters' letters for the record. The legislation will complement the CARES Act and Paycheck Protection Program by simplifying the application process and reducing restrictions on how funds can be used. It's aimed at providing continued relief to businesses and employees most impacted by COVID-19, which are small businesses, independently owned franchises, and business operating in rural and underserved areas. And I believe this legislation will be instructive on how to address future pandemics. I also want to thank witnesses on the panel representing the National Retail Federation, NAMIC, and APCIA for already endorsing the bill. I'd also like to ask witnesses to submit their comments on this legislation for the record as well.
And Mr. Gooden, you want that as part of the hearing record, is that correct?
That's correct, Chairman.
Without objection, so ordered, and you may proceed.
Thank you. Mr. Lehmann, I wanted to ask you a comment. It seems as the concept of insurance is perhaps being overlooked by some, and that principle, the basic principle that it's designed to be covering the losses of the few paid for by the many. And in this case, a global pandemic or a national pandemic is a major loss of everyone paid for by everyone. So I'd like for you to touch on that, but I also want you to comment on this idea of a mandate for insurers. Some have suggested that it might help to solve the issue we're talking about today if we mandate that insurers offer this coverage and then backstop it. But would that work, and what are the unintended consequences and consequences to the market as well?
Yeah, I believe I put in my written statement the line I've used a lot, but if half the global economy shuts down, the insurance industry alone cannot carry the other half on its back. There will never be a scenario where that's possible. That's why an event of this size, correlation is not possible for the insurance industry to write on its own. On the question of a mandate, the concern would be, the upside is if it's included in every policy that has business interruption, then Ms. Cantrell doesn't have to know, right? That it's just automatic. I have business interruption, so I'm covered for that. The question is, if you add the costs, would the business still buy business interruption? Because 2/3 of businesses don't. That's an open question. If you reduce take up of business interruption, then you're not necessarily getting the outcome that you want.
Thank you. Mr. Doyle, I've heard from brokers around the country that the availability of pandemic-related insurance has disappeared. And some have indicated to me that Congress should wait until after the crisis is over before contemplating a program to address future occurrences. In the case of TRIA, the incidents were catastrophic. It only affected certain areas, but it was a one-time incident. The very next day, we were talking about what do we do because the attack had happened. In this case, the pandemic is still ongoing. We're potentially not even to the worst of it. Do you have any thoughts on whether Congress should wait until after this is complete before we talk about a long-term solution from an insurance perspective?
Thank you, Congressman. The market for pandemic insurance was limited prior to COVID, and it's more limited today. And our clients are facing these risks and have no means to deal with them at the moment. As I mentioned earlier in my prepared remarks, I think it's fundamental and critical to the economic recovery that we act quickly. We should be thoughtful, of course, and as we've all talked about, what Congresswoman Maloney has put forth is a terrific starting place for a conversation. But I also think we can't wait. We need to move soon.
Thank you. And Mr. Chairman, I yield back.
I thank the gentleman for your testimony. At this point, we will now go to the gentlewoman from California, who is also the chairwoman of the full committee. Representative Waters, you are recognized for 5 minutes.
Thank you so very much, Mr. Chairman. I would request a point of personal privilege.
Please proceed.
Thank you. Mr. Chairman, is what that we will not have the opportunity to work with you in this Committee of Financial Services. And I would like to say to you today that we will miss you. We will miss you. We will miss your work. We will miss your leadership. We will miss your dedication to the great issues of this committee, particularly on housing. I know on the issues of housing, and I know the successes not only in St. Lucie, but our little town of Wellston. I know so well, but many members do not know that this is my hometown. Hello? I was born in St. Louis, and that we are family members. So that your first cousin is the father of my nephew. And the Clay family, the Moore family, and the Carr family is a huge family in St. Louis, Missouri. We love you, we respect you, and we wish you the best as you move forward with what will continue to be productive. So thank you very much.
Thank you so much, Madam Chair and cousin. You recognized for 5 minutes.
Thank you. Now that they know, they won't have to hold that against you that you're my cousin.
I hope not. Thank you.
Thank you. Thank you. I will turn now to a question for Ms. McLaughlin. Is she in the room?
McLaughlin? I am, Chairwoman. Yes.
Thank you. The largest industry trade groups have argued that pandemics simply cannot be insured against. Their proposed solution puts all of the responsibility for helping businesses and insuring against the risk of a pandemic on the federal government. But not everyone within the insurance industry agrees. When cases of COVID-19 were first spiking in the spring, business interruption losses to businesses were estimated at over $1 trillion each month. And so I'd like to ask you, do you think the federal government should be entirely on the hook for these costs? What do you think?
I don't think the federal government should be entirely on the hook. I think that the insurance industry should play a role in this as well. But because we need to protect our balance sheets, we need to make sure that the role of the insurance industry has some guardrails. And that's really what the Chubb program has presented. It's presented a finite exposure for the insurance industry. And as we learn about this over time, we think that exposure or limit will grow.
Well, I want to thank you for your explanation and your concern and the way that you describe the role that each should play. Let me follow up, Ms. McLaughlin. Ms. Cantrell, I want to thank you, and I'm going now to Ms. Cantrell. When the pandemic first broke out and your business was forced to shut down, what were the expenses that you were most urgent that you might have expected your insurance policy to cover?
Yes, thank you so much for the question. First of all, our rent, which is we're in New York City, is very high. Payroll costs, health insurance, our bills, that all the financial obligations that were due from buying in the retail cycle. So all of those.
So you're able to basically identify how government and insurance can play a role, and you believe that the Chubb proposal would accomplish that?
I'm not that familiar with the Chubb proposal. I'm not that familiar.
But do you think that both the insurance industry and government could or should play a role?
Absolutely.
You think that the insurance industry should not be left to try to bear the burden of the cost of COVID-19 or pandemic. Is that right?
I think it should be shared with a backstop, yes.
All right, well, I thank you very much. And Mr. Chairman, I will yield back the balance of my time.
The chairwoman yields back, and at this time we go to the gentleman from Indiana, Mr. Hollingsworth. You are recognized for 5 minutes.
Well, thank you so much, sir, and really appreciate your service to this subcommittee and to the committee as a whole. Number one, I want to talk about all the bad ideas that we are throwing around here, and certainly want to put a nail in the coffin of what I think is the absolute worst idea that's ever been brought forth about how we handle this. And that is forcing insurers to pay out claims for which they did not collect premiums retroactively. This is not even an idea. It's not even a solution. It's a rewriting of tens of thousands of contracts across this country, ripping apart the very basis of contract law, which has underpinned our free market economy for 240 years. It is a violation of those basic principles. And in addition to that, I think we all need to remember that every state regulator approved the exclusion of pandemic insurance as a part of business interruption insurance. That was approved by red and blue state regulators across the country. And I think that's been lost in the conversation. I want to take my first question to Mr. Kuhlmann and really ask, we are using the word insurance a lot in this hearing, in this dialogue, but really zooming out, I continue to hear from industry, from experts, and from academics that this is truly an uninsurable risk for the industry. Can you elaborate on why this is an uninsurable risk briefly?
Certainly, Congressman. Thank you for the question. The very nature of the pandemic, the fact that it is occurring all at the same time for tens of millions of businesses all at the same time, all over the country, it's not something that we can spread the risk around. Insurance, right, as Mr. Lehmann said, is something that, you use the many to pay for the claims of the few, and this would be everyone attempting to try to pay for everything at once.
Right. So when I hear other members talk about how they want government involved in this and private-public partnerships, really what they mean by government involvement is either one of two things, right? Number one, trying to reduce the very high premiums that pandemic insurance would cost if it was in the private sector, because they want to improve uptake, so they'll be reducing premiums, or the absorption of the massive contemporaneous losses that would occur. That's what I continue to hear people say by public involvement in this. And the first is most disconcerting, because what I hear from all of these members saying, gosh, this would improve economic stability. We need more people to take this out so that their risks are lowered. But if more people are taking it out, it means we've lowered the premiums dramatically, not reflecting the real underlying risk that is being taken either by insurance companies or by the government. Because in and of itself as standalone, if it were insurable, the cost would be very, very high. Isn't that correct?
That is absolutely correct. The affordability is very key. That's why we believe the BCPP is a way that you would have the product be much more affordable and could be bought by small businesses and nonprofits all over the country. And the more people that buy into it, of course, the cost of it will go down.
Right. But as you said, the more people that buy into it, the more concurrent losses you're also going to have, which means you need the government's balance sheet to step in, because if uptake is very, very good, you'll have the good problem of a lot of people getting paid out, but the bad problem of a lot of people making those payments being taxpayers. And that continues to be a deep concern to Hoosiers and to Americans alike. The second big thing that I wanted to touch on is this notion that in the future Congresses are going to say to American businesses, hey, you paid into this program, we're going to give you a recovery, but your business next door, which is suffering mightily in this future pandemic, is not going to get paid out. I've only been in Congress 4 years, but I have borne witness to many a times when we do not make such a distinction. And the inclination of future Congresses will be to pay everybody, to give everybody a recovery, to help spur the economy along. And then no one will buy that insurance, quote unquote insurance, next round because they'll recognize everyone got the same payment whether they paid into the program or not. So I think this whole hearing is about a lot of bad ideas that are masked under good economic policy or masked under insurance, but aren't actually either. With that, I'll yield back.
Thank you, Mr. Hollingsworth. And now I want to recognize my friend and neighbor to the north from Iowa, Cindy Axney, for 5 minutes. You will recognize. Unmute for us.
Thank you, Chairman. It's so good to see you. And really grateful to be here having this hearing on a really important topic right now. We all know that our country has been hit incredibly hard by this pandemic. Can you all hear me okay, or am I echoing?
You are echoing. Perhaps our technicians can help us. Try it again, Cindy.
Let's try this again.
Still echoing. Wow. I tell you what, can we come back to, well, let me hear you now. Go ahead.
How does this sound?
Still an echo. Mr. Gonzalez of Ohio, and then we'll come back to you, Cindy.
Okay.
Mr. Gonzalez, you're recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to everybody for participating in this hearing. Obviously, a lot of thought has gone into the various proposals, and I appreciate that. I don't want to be too negative on the work, because I know people are sincerely trying to solve what is a very difficult problem. Having said that, I do want to associate myself with Mr. Hollingsworth's remarks almost in full. It seems awfully premature, and I've heard from Mr. Kuhlmann. I'm curious what Mr. Lehmann, Ms. McLaughlin, or Mr. Doyle would say. Does anybody believe that this is an insurable risk in the traditional sense?
Congressman, I guess I'll go first. There are risks within the pandemic that are insurable. It is not possible for the industry at the macro level to insure the entire pandemic. But you can have a policy that is discrete and has caps, so long as those caps will be respected, that an insurer will write. It's just not nearly enough for the size of the problem.
Precisely, yeah. And I think, again, I'll be very quick, because frankly, Trey did as good a job as you could possibly do to reflect my personal views. But again, I would say we are in the middle of this. We're at the end. I think it's very premature and quite frankly arrogant to think that we could right now sit here and come up the perfect program or a workable program that would insure us against future pandemics. Personally, I think what we probably should do is navigate our way through this current pandemic, review how all the programs we put in place worked, what worked well, what didn't work well, what adjustments would we make in future pandemics, and then move forward from there. But I do appreciate all the work everybody's done, because I know we're all trying our best here. But that would be my take. Thank you for the hearing. Thank you for recognizing me, and I yield back.
The gentleman from Ohio yields back. I'd like to go back to the gentlewoman from Iowa, Ms. Axney. Ms. Axney, are you there? No. Okay, she's not there now. So we will go to Mr. Timmons of South Carolina. Mr. Timmons, you're recognized for 5 minutes.
Thank you, Mr. Chairman. And Mr. Chairman, thank you for your great service to this committee and to the House as a whole. I wish you the best in the future. We will all no doubt miss your leadership.
Thank you.
So we find ourselves in the midst of a disaster. Make no mistake, this pandemic has devastated folks all over the country. The very same people who send us to Congress to be their voice in these critical decisions. As a small business owner myself, I feel the intense pain of many beloved local stores and restaurants in my district who will not be opening anytime soon if they ever do reopen. These places operate on thin margins and rely on loyal customers, many of whom are unwilling or unable to return to the ways they are accustomed to shopping. And this is not the business owner's fault. And from what I have heard today, any long-term solution must work for all parts of the economy. And most importantly, it must ultimately help those who are forced to close their businesses by the government. On that note, Mr. Kuhlmann, would PRIA, as proposed, address the problems so many of our small business owners are currently facing?
We believe that the BCPP is a better model than the proposed PRIA, mainly because of you're back into the insurance model for handling those claims and the amount of time that it would take to actually adjust the claims versus the BCPP, which could get money directly in the hands of the needed small businesses. Thank you, Congressman.
But PRIA, you would agree, would not necessarily, as designed to help the small business owners that we are most focused on helping. Is that a fair statement?
Well, and I believe part of that is the affordability of it. I think that through the BCPP, it will be much more affordable than a PRIA model, which I think it would not be affordable for most small businesses who operate on, as you said, the very thin margins. Agreed.
If PRIA had been the law last year, does anybody on this call want to estimate the cost to the federal government for its portion of these losses? Does anybody have guesstimates? I mean, we're talking trillions, I'm guessing.
Yes, Congressman, and that is why we need. I mean, if the diversification issue didn't exist, the private market would have solved for this already. So this is why we need the ultimate support of the federal government.
Well, I certainly appreciate my colleague's willingness to put her idea on paper. I don't believe this is a realistic solution. My colleagues, Gonzalez and Hollingsworth, have made solid points. Ensuring the risks posed by potential terrorist attacks versus the risks posed by a global pandemic, they just couldn't be more different. Terror attacks, even the worst and most devastating ones, are typically confined to relatively small geographic areas, and they have a very clear beginning and end. Pandemics, on the other hand, by definition, are occurring everywhere at once for an unknown amount of time. To think that we could essentially copy and paste our plan for insuring against terrorism for that of insuring against pandemics, it just doesn't work. Furthermore, I believe that the time to plan for the next 100-year pandemic is not in the middle of the current one. Small businesses are suffering due to government closures. Nothing we are discussing today will help Ms. Cantrell or any of the other businesses in our districts that are facing the prospects of closing right now. The CARES Act was very helpful, but it was over 7 months ago. Our inaction in Congress is quite frankly disgraceful. When the government puts people out of work due to no fault of their own for safety purposes of our citizenry, it must step in and make those businesses and individuals whole. We have neglected our duty and must act immediately. Many businesses in my district were able to get PPP loans, and that is something that we all agree on. We need to make sure that businesses that are still suffering, that have the revenue loss, are able to get the assistance. If we're going to shut them down, we have an obligation. We have an obligation to make sure that they get through this pandemic. I believe that we can get this done. I believe we need to get it done quickly. And I look forward to working with my colleagues to get through this pandemic and then finding a good policy-based solution that will allow us to prepare for the next one. And with that, Mr. Chairman, I yield the balance of my time. Thank you.
Thank you, Mr. Chairman. Let me say that if you have any relationship with your two U.S. senators, I would urge that you talk to them about getting back to the negotiating table with the Speaker Pelosi as well as with Treasury Secretary Mnuchin, and that would help us address some of the issues that you raised. Anyway,
yes, Mr. Chairman, I've been pushing that as hard as I can, but at the end of the day, we need to help people that are being adversely affected by COVID and not bail out states' insolvent pension funds. We can find a way forward, I'm sure.
And then we as a Congress have to agree that we want to help the American people during this global health pandemic. Let me go on and let's try Miss Axney one more time. You are recognized for 5 minutes.
Well, how does this sound, Chairman?
Much better. It sounds like you.
Perfect. Thank you so much for putting up with my technical difficulties over here. I never thought I'd be saying that in the middle of a hearing, but here we go. Thank you so much, Chairman, for holding this and for having me here. This is an incredibly important topic, of course, for small businesses across the country who've been hit so hard with this pandemic. We could be looking at 40 to 50% of our restaurants closing in the next 6 months. And that's just one example with COVID uncontrollably getting worse across this country. So the starting point for what we're discussing here today is that businesses in my district and around the country found out in March that even if they were in the 30 to 40% of companies that had business interruption insurance, it likely didn't cover pandemics. Mr. Doyle, none of the proposals we're discussing today would be retroactive and cover COVID-19 losses. Is that correct?
That is correct, Congresswoman.
Thank you. Now, I know the estimates for the losses were more than $400 billion per month for just the smallest businesses. Ms. Melendez, McLaughlin, or Mr. Kuhlmann, I'm wondering, how much in losses do you think that we might be talking about insuring? Do you have an updated estimate for the losses so far this year?
Congresswoman, I don't have an estimate of the losses for this year.
Okay. Mr. Kuhlmann, do you?
No, I do not.
All right.
Thank you.
So for any of the witnesses, if this were just to be covered overall, do you have a sense of what kind of premiums then that we'd be talking about relative to current BI insurance?
Congresswoman, excuse me, what I'm suggesting is that we develop a program that encourages participation, right? It would need to, in some way, be subsidized by the government and the U.S. government's balance sheet. I would make the case that the government ultimately is holding the risk today. What's missing today from whether it's the CARES Act or the BCPP are the social benefits of insurance. And we can mitigate the future impact of pandemics on our economy if the private market, the government, and our policyholders come together.
Well, I very much appreciate that, but I have to be honest here. It's hard for me to evaluate proposals to cover future pandemics when no one knows what those premiums might be. That's an important piece of what this looks like. Mr. Doyle and Mr. Kuhlmann, do you have any sense of what percentage of businesses might want pandemic coverage, either with or without a federal subsidy? And if you're including a federal subsidy in that, how large do you estimate that subsidy to be?
It's hard to say what the ultimate take-up rate would be, Congresswoman. Of course, it would depend upon how we structured and ultimately priced the program, but a government subsidy would be required. And we need to figure out the modeling and the data behind that.
Okay. So no clear understanding right now at this point on the kind of premiums and or the types of subsidies that would be necessary for that, is my understanding.
It would ultimately depend upon the amount of risk that the government would be willing to backstop for the private market.
Okay. Now, this crisis, of course, unfortunately, has shown us firsthand how many of our businesses can't even go weeks without some revenue coming in. And there's another issue that we have to address here, which is how fast we can get relief to the businesses that need it. And we certainly saw that with the PPP this spring, how much a difference even just a few weeks can make in getting that into folks' hands. And I know that firsthand that processing insurance claims isn't always the quickest process. And that's without everyone making a claim all at the same time. Under any of the concepts we're considering, how quickly would business be able to get the help they need during a pandemic? And I'd take an answer from each one of you or any one of you on this.
For me, Congresswoman, connected to a parametric trigger. If we could set the right trigger, we could get that claim paid quite quickly, within weeks.
Within weeks, you said?
Yes.
I think, Congresswoman, under the BCPP with a parametric trigger, it would be immediate. You would not have a traditional claims process where you're have an adjuster trying to do some forensic accounting on determining the amount of the claim. So I think under the BCPP, it would be nearly immediate.
Yeah.
Thank you.
And Congresswoman, under the Chubb program as well, we're looking at a parametric structure for small businesses so we can get the funds in the hands of the small businesses as quickly as possible.
Okay. Well, thank you for that. Since these proposals are all forward-looking, I want to make sure that we've got a solution that actually works for the businesses that need it. Last thing, I just want to make sure that we don't raise costs for businesses so much that insurance could be unaffordable and push them out of business right now as we're coming out of a pandemic. We also risk fighting the last war and charging businesses for something they won't even use. So thank you so much for your answers to give me some clarity. And Chairman, I yield back.
Thank you so much, Ms. Axney, and I understand the ranking member from Ohio, Mr. Stivers, wants to make a closing statement.
I just wanted a point of personal privilege, Mr. Chairman.
Please go ahead.
I'll be very brief. I think this hearing is another example of showing your leadership and what you've done to make Congress better, to make America stronger, and to serve your constituents, Mr. Chairman. And I, for one, am very proud to have worked with you. And I want to say good luck to you in your future, and that we will all miss you very deeply, and your expertise, your hard work, your diligence, and your caring nature, Mr. Chairman. Thank you for make our country better and to represent the best of us. Today's just another example of that. Thanks for a great hearing today. Thanks for made a difference for America. God bless you in your future, Mr. Chairman.
Thank you so much, Mr. Stivers. And let me first say I'd like to thank our witnesses for their testimony today. And without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you are able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. And I remind members to submit written questions and materials for the record to the email address provided to your staff. Without objection, I'd like to submit a letter from Ranking Member Stivers and I to the President Trump for the record, and also a letter to House leadership. Both letters address pandemic risk insurance. And now on in closing, this hearing has certainly raised interesting and intriguing issues on how to best protect businesses of all sizes during a global health pandemic. And I want to thank Chairwoman Maloney for bringing this issue to the forefront, and I am certain this will not be the last we hear of this issue. More than likely, this will be the last hearing that I chair of this subcommittee, since I will be leaving the House at the end of the 116th Congress. Let me say that it has been an honor and privilege to serve in this august body, and a distinction only experienced by some 11,000 Americans throughout our nation's history. And as Chair Waters mentioned, we are relatives. But to me, to all of the members of this committee and this Congress, I look at you all like we are family and hold you in my heart as such. And I wish you all success in the 117th Congress, and God bless you all. This hearing is adjourned. Thank you.